After understanding the concept of depreciation, let us now see what are the conditions relating to depreciation under the Income Tax Act. When I say what are the conditions, what I mean is it that depreciation is available on all the assets? I mean, definition of asset is very wide. Is it that you are entitled to depreciation on each and every asset that you have? Or is it that depreciation is allowed on only certain category of assets while not on the others? And if so, how should I be related to that asset so that I can claim depreciation on that? So let us see. So the first category of assets on which depreciation is allowed are the tangible assets. And the second one is intangible assets. Now the difference between these two is very, very important. What do you mean by tangible asset? Now tangible asset is something that you can see, you can touch, you can feel. So let us say, for example, I am running my business in a building which I own. Now I can see that building. I can touch, I can feel that building. So tangible assets are the assets which can be seen, which can be felt. While intangible assets are something which cannot be seen, which means that, let's say, we all know and we all eat, or at least most of us would, eat McDonald's burger. Now that brand McDonald, wherever it is written, the comfort that it gives to any person is that whatever servings are there in this particular place will meet a certain set of criteria. So that name McDonald, which is there, and everyone cannot write McDonald outside its shop, is not something, the value that we perceive for that name itself is not something that we can go and touch. But definitely it is an asset for the company, because as long as they have that same name, people will come and buy products from them. So the first thing is the tangible assets. Now, which are the tangible assets on which depreciation is allowed? Building. Now, there are a lot of cases on what is meant by a building and what is not meant by a building, that you can please refer to the notes. But building will exclude your land. So if suppose you own a land on which the building is included, then the depreciation is given only on the value of the building and not on the value of the land. Plant and machinery, we all know what does this mean. Furniture. Now furniture includes false ceiling and partition work in a building. So suppose if I take a building on lease, okay, and I create the false ceiling or partitions according to my requirement. Most of the companies, wherever people work, even you would be going to your CA's office for training, you would note that there are wooden partitions in between. These partitions will also get covered within the definition of furniture. Let us see the second one, intangible assets. Now, intangible assets which you cannot see, which you cannot feel, but are important. Know-how. Know-how is basically, suppose it's the technique through which you can do a particular work by following a set of processes. Copyright. Every time you watch a television, you see a mark written as this and written as this. Copyright is basically means that it depicts as to who is the owner of a particular asset. Trademark. Let's say you have Reliance. In Reliance, you have a trademark which is their sign. Recently, Airtel also changed their sign. So that's the trademark, important. Franchises, business or commercial rights, etc. So other rights that you have for business, etc. is the intangible. The importance of classifying these differently between tangible and intangible is that the rates of depreciation are different for different category of assets. Now let us see what are the conditions for claiming depreciation on assets. So the first important thing is ownership of an asset.